Hello and welcome to Follow the Money. I'm Raine Musñgi. Join us as we explore the tools and insights you need to jumpstart your financial journey. U.S. stock futures dipped as investors wait to see how key economic data and election results will shape the markets. The S&P 500, Dow Jones, and Industrial Average and NASDAQ futures all pulled back as traders took a cautious stance ahead of Tuesday's economic reports and an update on November inflation. November inflation numbers set to be released could influence the Federal Reserve's next move on interest rates. The Fed recently signaled it could keep interest rates steady if inflation stays within target, but pressure remains to control prices as the holiday shopping season begins.
Here, a little bit of profit taking. The purchases into all markets, but specifically U.S. Equity markets, big and small, were pretty significant last week, and you've got a little bit of profit taking on the margin. Not a ton of news. Banking holiday yesterday. You get some CPI stuff coming tomorrow, but pretty quiet. And with a little bit of a blip today, we're still up mid-single digits in a week of trading, which in most years is great for half of a year of trading. So on a relative basis, not all that significant.
Experts say another factor dragging futures down was a dip in overseas markets where Asia and Europe reported slight losses on Monday amid geopolitical and economic uncertainty. All eyes are on the economic data expected this week, and until then, investors seem to be taking a breather. OPEC cuts its forecast for global oil demand growth this year and the next. The producer group predicts oil demand will rise by 1.82 million barrels per day in 2024, down from its previous estimate of 1.93. As for 2025, OPEC's projection was reduced to 1.54 million barrels per day from 1.64 million. China accounted for bulk of the downgrade as OPEC says diesel use in the country has been under pressure from a slowdown in construction amid weak manufacturing activity. Meanwhile, oil and gas giant Shell wins an appeal against a landmark climate ruling in the Netherlands. The case stems from a 2021 court order for the company to cut greenhouse gas emissions by 45% by 2030. Climate activists brought the complaint in 2019, arguing that Shell has an obligation to protect people from global warming. But the appeals court at The Hague dismissed the ruling, saying Shell is already on its way to meeting required targets for its own emissions. The court adds it's unclear if demands on the firm to reduce emissions will help fight climate change.
Er is ook veel belangstelling voor deze zaak. Er is een livestream.
Shell has set a specific reduction target for Scope 1 and 2. That means its Scope 1 and 2 emissions will be reduced by 50% by 2030 compared to 2016. Furthermore, it follows from the documents provided by Shell that it had already achieved a 31% reduction by 2023. So Shell is already doing what Milieudefensie is claiming from it. Milieudefensie's claim regarding Scope 1 and 2 is therefore not admissible.
Well, environmental groups vow to continue pushing for accountability, saying the ruling sets a troubling precedent.
It's too early to announce new steps. We're going to take the time to read the court judgment, but it's clear in the summary the judge stated that the more than 800 oil and gas projects that are planned by Shell, that they are contradictory to the responsibility of Shell to reduce its CO2 emissions in accordance with international climate agreements and contributes to human rights violations.
Obviously, we're not done with Shell. We're still going to campaign, we're still going to fight, and there's going to be lots of activism still. And if this isn't the way, there will be another way to make them reduce their emissions, I think. But yeah, obviously I'm disappointed.
And a major boost for the electric vehicle industry, Rivian and Volkswagen Group have announced a $58 billion joint venture to increase production capacity and expand electric vehicle options. This deal marks a strategic move to compete with industry leaders Tesla and China's BYD. The companies say the partnership will focus on developing new EV models and building advanced manufacturing facilities across Europe and North America, with plans to ramp up production by late next year. This move comes as governments worldwide press for stricter emission standards and offer tax incentives to promote EV adoption. Rivian and Volkswagen's expanded production efforts are expected to help alleviate supply chain bottlenecks that have slowed EV output for many manufacturers this year. With the venture, Rivian and Volkswagen aims to make a strong play in a market where global EV sales are expected to reach over 25 million units by the year 2030. In a major step for global climate action, development banks have pledged to provide $120 billion in climate finance by the year 2030. The announcement came during the United Nations Climate Conference, with funds aimed at helping vulnerable countries adapt to climate change and reduce emissions. The finance will target projects like clean energy initiatives, disaster resilience, and infrastructure upgrades to cope with extreme weather. The commitment is part of an effort to mobilize private investment alongside public funding to reach the $100 billion annual climate goal set by the Paris Agreement. Developing countries have been pressing for more support, arguing that they bear the disproportionate burden of climate impacts despite having lower emissions. The G7 countries are meeting in Florence, Italy this week to discuss a growing challenge for tourist hotspots: over-tourism. The meeting aims to address the strain that tourism is putting on cultural sites and local infrastructure in top European destinations. Italy, along with France and Spain, has been particularly impacted by overcrowding at its historic sites. From Venice to Florence, local officials report that tourism levels are nearly 20% higher this year than before the pandemic, raising concerns about damage to historic landmarks and a lack of housing for residents. The G7's focus includes discussing sustainable tourism strategies and developing policies to preserve cultural sites while managing the growing number of global tourists. The Canadian government is taking strong action to end a series of port lockouts that have disrupted trade nationwide. On Monday, officials announced that they will enforce mandatory arbitration, hoping to resolve an ongoing dispute between dock workers and port management that has stalled millions of dollars in trade. The lockouts began earlier this month, halting operations at key ports in Vancouver and Prince Rupert, leaving an estimated $10 billion worth of goods unmoved. The stalemate between the union, which represents over 7,400 dock workers, and the BC Maritime Employers Association centers on wages and job security. With arbitration now imposed, both parties are required to resolve the dispute through mediation, a move expected to take weeks. The Federal Aviation Administration has imposed a ban on U.S. airlines flying to or from Haiti following incidents of gunfire striking 2 aircraft at Port-au-Prince Airport. The order, issued Monday, will be in place until Haitian authorities can ensure safer conditions for flights. The incidents mark the latest escalation of security concerns in Haiti, where armed groups have recently targeted government sites and infrastructure. According to official reports, both incidents involved bullets striking commercial aircraft, and while there were no injuries, the FAA is not taking any chances. The ban will remain in effect until the Haitian government can implement stricter security measures to protect air traffic. For now, travelers are advised to seek alternative routes if headed to or from Haiti. Meanwhile, the Wall Street Journal reports Spirit Airlines is preparing to file for bankruptcy as its merger talks with Frontier Airlines broke down. More news in business and the economy in a moment. Stay on BNC. Welcome back to Follow the Money. After a tumultuous year filled with anxiety and a legal battle about its future in the U.S., TikTok may have just been thrown a lifeline by the man who was once its biggest foe, Donald Trump. President-elect Trump, who tried to ban the social media platform the last time he was in the White House, has repeatedly pledged during his most recent campaign to oppose a ban on the short-form video app, which could happen as soon as mid-January if the company loses a court case that's currently underway in Washington. When reached for comment, the Trump transition team did not offer details on how Trump plans to carry out his pledge to save TikTok, as he said on Truth Social post in September, while encouraging people who care about the platform to vote for him. But Caroline Levitt, a spokeswoman for the transition team, indicated in a statement that he plans to see it through. With over 150 million U.S. users, TikTok is one of the nation's most popular social media apps. Apple is planning to launch a new AI-powered wall tablet by March next year. That's according to Bloomberg sources. This device would be Apple's first standalone product specifically designed for home automation, putting the company in direct competition with Amazon's Echo and Google's Nest. The tablet is expected to feature advanced AI capabilities to interact seamlessly with Apple's HomeKit system and may include voice and touch interfaces. It's likely designed to control lights, cameras, and other smart home devices. With this move, Apple appears to be expanding its smart home product line at a time when AI-compatible devices are in high demand. This wall tablet will position Apple to capitalize on the booming AI and home automation market. Japan's SoftBank is making a bold move into artificial intelligence itself, announcing new investments following a strong earnings report. SoftBank reported a $3 billion profit for the quarter, a major turnaround from losses earlier this year. SoftBank's AI plans include expanding its venture capital funding to support startups developing cutting-edge technologies. Analysts say this could make SoftBank a major player in the AI industry, which is projected to reach a global value of over $1 trillion by 2030. The company is also eyeing new strategic partnerships to boost its portfolio and mitigate market risks as it diversifies beyond telecommunications and internet businesses. The Shopify stock surged, hitting a nearly 3-year high after reporting better than expected third quarter results. The company posted $1.9 billion in revenue, an impressive 27% year-on-year increase, driven by strong e-commerce and cloud sales. Investors responded favorably, pushing Shopify stock up more than 15%. The company attributed the results to its global expansion and continued demand for digital business solutions amid a strong holiday shopping season. Analysts predict Shopify could keep up this momentum, especially as small businesses and entrepreneurs worldwide leverage e-commerce to reach new markets. Sea Limited, the parent company of e-commerce powerhouse Shopee, saw its stock soar Tuesday after reporting record profits for the third quarter. Sea posted a net profit of $323 million for Q3, exceeding market expectations and marking a strong comeback for the Singapore-based tech company. This news sent Sea's stock up more than 12%. Sea's impressive quarterly results were largely driven by Shopee's continued success in Southeast Asia and Latin America. While its gaming division, Garena, maintained steady performance, Sea also increased cost-cutting measures in other areas, boosting overall profitability. Genetics company 23andMe is making drastic cuts, announcing it will lay off nearly half of its workforce. The company will reduce staff by 40% as it struggles with financial challenges and falling demand for DNA testing. This cut will affect more than 300 employees across its operations. This layoff round is the company's second in just 2 years. 23andMe was once at the forefront of direct-to-consumer DNA testing, but the market has shrunk considerably in recent years. The company is also contending with growing regulatory and privacy challenges around consumer genetics data. Finally, Spotify exceeded expectations for subscriber growth in its latest earnings report, adding over 20 million new paying subscribers in the last quarter. Bloomberg reports the streaming giant now has 252 million paid users, a record for the company and higher than analyst predictions. Revenue reached $3.6 billion, with subscription revenue up by 15%. Despite the gains, ad sales continue to disappoint, falling short of expectations. Spotify reported a 5% decline in ad revenue as advertisers pull back in a weakened economy. Still, the company remains confident in its long-term strategy, investing in podcasting and audio innovations to attract more listeners and ad partners. Longtime news anchor Chris Wallace is leaving CNN to launch an independent media venture. Wallace, who joined CNN in 2021 after 18 years at Fox News, made the surprise announcement Monday. Wallace joined CNN amid the network's push to expand its lineup of high-profile news personalities. However, his show, Who's Talking to Chris Wallace, struggled to gain strong ratings compared to his time in network television. His new media venture is expected to focus on in-depth interviews and podcasts. And that is it for today's edition of Follow the Money. I'm Raine Musñgi. Thank you so much for watching. Keep it here on BNC, the Billionaire News channel, always on top.